Did you know the average veteran paid an extra $8,155 in 2024 to use that amazing VA home loan? These are the benefits that veterans earn, but still the cost of accessing them has gone up for many. It doesn't have to be this way, and today I'm going to break down the numbers, reveal the hidden fees that are costing veterans thousands of dollars, and most importantly, we're going to show you how to save money. In 2024 alone, over 416,000 VA home loans were originating, totaling more than $155 billion in mortgage volume. Now, that is a huge amount, and it reflects just how many veterans are turning to the VA home loan to help them achieve the dream of home ownership. And that is what we're all about on the channel. But what isn't often discussed are the added costs that come with using the VA home loan, costs that are sometimes unclear or hidden from borrowers. And we know this because we review loan estimates all the time for clients that are using the VA home loan, and they're just like, oh, I thought this might have been a standard fee, or the VA just charges that fee. We're gonna break all that down. So let's dive into the numbers. Now, here's what they don't want you to know. Out of the 416,290 total VA home loans, 298,000, a little bit over that, were purchases. That's where veterans became homeowners and utilized the VA home loan. Now, what they don't publish is if veterans utilized the 100% financing or they put money down. Out of that, also 67,000, just a little over, were cash out refinances where veterans leveraged the equity in their property to get cash out of it. Now, also with this is that my thought is a lot of people left lower interest rates to gain access to cash. Now, I did a whole separate video on understanding the difference between doing a cash out refinance and doing a HELOC, and you guys could check out the channel to see that because a lot of veterans don't realize that they can keep the rates on their current property and leverage it with a second mortgage. But I think veterans get steered away into just like doing a full out refinance. So be smart with your money. That's what we're all about. And a little over 50,000 loans were interest rate reduction refinance loans. That's where veterans take advantage of lower rates to reduce their monthly payment. But here's where it gets interesting. According to data from the Consumer Financial Protection Bureau's Office of Mortgage Markets, sourced from HMDA, which is the Home Mortgage Disclosure Act. I know it may sound boring, but it is extremely relevant. You fill out the HMDA information where every time you do an application, we have it. It's not used per se against you because it's not, but they use it to track what's going on. So people on average are paying hefty fees on top of the mortgage itself. So let's talk about how much you're really paying to use your benefits. Now, the cost of the VA home loan, which has hidden fees that add up. Here's a breakdown of the average fees veterans are paying for accessing that amazing VA home loan that you've earned. On a cash out refinance, veterans on average are paying 2.1% in discount points. That may not sound like a lot, but when you start factoring in the size of the loan, it adds up quickly. I mean, average loan amount's like $400,000. So let's imagine $8,000 in fees. Now, and I think one reason why they do that is because let's say you're leveraging equity out of your property, so you're not paying for it out of pocket, right? Sometimes it makes sense, sometimes it doesn't. But we're going to break down where all these magical fees come from. Now, for non-cash out refinances, right there, you're just doing a rate and term refinance or potentially like an interest rate reduction refinance loan. You're talking about 1.1% in discount points, which is a bit lower, but still it's significant. Now, on home purchases, the average discount point cost here is about 1%, which is the lowest out of the three, but it's still money out of your pocket. Discount points are calculated as a percentage of the loan amount, where 1% of the loan value. For example, if you're taking out a $300,000 loan, one discount point would cost you $3,000. Now, discount points are paid up front in exchange for a lower interest rate on your loan, but that number definitely varies. The more points you pay, In theory, the lower your interest rate can be, which can save you money over the life of the loan. Now, however, it's important to remember that discount points are essentially a form of prepayment. You're paying more upfront to reduce your monthly payment over time. Now, the number of points you choose to pay depends on your financial situation and how long you plan to stay in the home, as the upfront costs may not always make sense if you plan to sell or refinance, especially if you're trying to do that within a short period of time. Now, when it comes to different lenders, each one has its own pricing structure and profit margins. Lenders may often offer similar interest rates, but what you may not tell you up front is there's the different methods to calculate that cost is going to end up having different fees. So some lenders may offer a lower rate with higher discount points, while others may offer a slightly higher interest rate with no fees or no points. We've also seen it, based on my experience, where people come and say, "Hey, look, this is my loan product that I'm being offered." And I'll probably tell you my most successful story was from a couple months ago, where a veteran was being charged. This is kind of insane, over $20,000 in discount points with origination fees. And they were able to get this a lower rate with none of those additional fees. So there's definitely ways that you can save money, and it's just insane the amount that you can save just by looking around or reaching out to us and being able to see what we can help with. Not only all of those fees that we talked about, the VA also allows lenders to charge 1% origination fees. Now, this 1% origination fee is another cost that many veterans face when using the VA home loan. Now, this fee is charged by the lender for processing and underwriting your loan. Now, while this may seem standard in the mortgage industry, it's important to understand that this fee is often times negotiable and is not required. Lenders typically charge this fee to cover their operating costs, but it doesn't necessarily mean that it's set in stone. Depending on the lender, you may be able to shop around and find one that offers a lower origination fee or even completely waives that fee. Now, a side note, if you have a VA disability and you qualify for the waiver of the VA funding fee, this doesn't apply to that. And I'll talk about that a little bit more later. By being aware of this fee and asking the right questions, you could potentially save money on your loan and ensure you're not overpaying for the service, which again is your VA home loan. Now, the VA funding fee is another cost of doing business, but this time it's for the VA, right? Because they need to administer the program, so that's why they charge you. Now, if you have a 10% or higher VA disability rating, you don't pay the VA funding fee. Now, this VA funding fee can range anywhere from 0.5%, 0.5%, all the way up to 3.3% of your loan amount. Now, this fee is tacked onto the loan balance, which means you're paying interest on it for the life of the loan. This is money that could have gone towards building equity in your property. So that's why we also did a video on this, kind of really explain, should you do a down payment? Should you not? Are you in the process of going through VA disability? Because remember, if you file for your your intent and your VA disability is backdated prior to you purchasing your property, then you can submit to the VA to be able to get a refund. Huge benefit, and they literally send you a check in the mail. Now, it would be wise for you to take that money and pay down the principal of your mortgage so you're not paying interest on it, but everyone's financial situation is a little bit different. Now, looking at these numbers, here is the scary part. In 2024, based on the averages we looked at, veterans paid nearly $3.4 billion in fees to lenders just to use their own VA loan. That's right. I want you guys to hear that again, $3.4 billion. Now, if you break that down, it comes to an average of about $8,155 for the average veteran to use the VA home loan. And so why are you guys paying so much? Now, here's what you may be asking. Why am I paying these fees? Who controls interest rates and who decides the cost? Which is a great question, and I want to be able to answer that. So number one, the VA does not set mortgage rates for most loans. Yes, the VA loan program is guaranteed is government-backed loan, but the VA doesn't control the rates. The rates are set by the lender who you work with, which you can choose anyone to work with on that. Now I'm going to pull up something for you guys because the second thing I want to show you guys is going to be the Native American program that the VA does control, right? So I'm going to show you guys here, which is if you get, I'm going to drop the link down below as well. So you guys are going to see the Native American program, who's eligible for. So right now, the 30-year mortgage is at 2.5% per the VA, and this is something you have to reach out to the VA for. A lender is not going to offer this, but in today's rate environment, that is a powerful tool, especially if you can qualify for it. Now, I also show you the original notice that they did, which is VA lowers interest rates, housing markets more affordable for Native Americans. Now, this was put out in March of 2023. Now, this is set for 24 months. This is where they lowered the interest rate from 6% to 2.5%. And again, this is why it expires in March of 2025. And this also applies towards doing interest rate reduction refinance loans. So I know the VA is pushing to get this information out to the veteran community as much as possible so they are able to leverage it. Argument for regular veterans is that, well, why can't the VA offer this? But that's a question you have to take up with legislation and what they're planning on doing. Now, the third part, which is really the biggest part of this as well, is that lenders are businesses, and like any business, they need to cover their operating costs. These costs include things like rent, marketing, employee salaries, taxes, and a lot more things. Lenders also determine how much they want to make, which is what they arrive at with their fees and their rates and all the margins and everything that goes with it. The more they spend on advertising and marketing to the veteran community, the more they'll need to pass these costs on to you. Now, here is the real kicker. If you're working with a lender who spends millions of dollars on marketing, you are most likely paying for that marketing with your own money when you close on that deal. These lenders may be consistently sending you offers, sending out postcards, or running online ads. And guess what? Somebody has to pay for that, and because it's not free. So those costs we normally see get passed on to the veteran community, which I think is unfortunate because you fought for your country, you've earned your benefits. Now let's talk about how to save money on your VA home loan. So what can you do to avoid paying these fees and save money? The key part is to be informed and do your research. As veterans, we've earned these benefits, but that doesn't mean that you have to pay extra to do that. Now, one thing you guys can do, we're always preaching education, and we're always available to help you, walk you through this process. So if you guys would like, you can schedule a call with me down below. At least we can look at your financial picture, especially if you're a year out. That's when you really should start understanding, one, your financial picture, understanding your budget, understanding your credit, and understanding what it looks like to become a homeowner, because you can ask a lender to send you a fee sheet or fee itemization, which basically breaks down what the cost is for a given area. But note, there's a couple things that come with that, right? One, interest rates are typically not locked in until you find a place. So you're going to be moving with the market wherever it goes. So just plan for that. And if you're very active in the home buying process, make sure you're getting with the lender to say, hey, what are the current rates? We do a lot of that for folks. Hey, if we're seeing something change, we're letting you know, hey, rates have gone up or they're going down, which also puts you in a position to be able to act on property sooner than later. Again, this is why kind of like the winter markets are really good markets to be in, because it's not as much activity. Normally you just kind of get into overall better deals. The second part is going to be working with the right team that specializes when working with veterans and the VA home loan. I cannot tell you guys, and I teach across the country, various programs around the military, both real estate community and for the veteran community as well. And I'll tell you that when people don't have experience working with VA home loans, oftentimes I will get emails or comments that veterans are being steered away from their benefits because lenders may not be comfortable with them. Same thing goes with the real estate community. You really need to know how to position the loan that's most favorable to you, and you need to understand how the program works, because we'll explain things to clients, or that hey, this is how basically actually the program works and they're like, man, I missed out on a lot of properties because I wasn't told of X. So don't be in that position, because that costs you even more. The other part you want to do is consider your VA disability rating. If you have a 10% or greater VA disability rating, you can at least waive the VA funding fee, which saves a significant amount on your loan. The process to be able to file is, first you reach out to the VA. You file your notice to file, and then you have up to a year from there to be able to actually go in and file for your VA disability rating. So even if you're going through the home buying process now and you don't have the rating right now, that's fine, because remember, if it's backdated prior to closing on your home, you potentially can get a refund, which is a straightforward process by reaching out to the VA. The fourth thing we're going to talk about is really leveraging your benefits and understanding the scope of the actual benefits that are included, and just know what the facts are of the program, like being able to buy multifamilies. If I buy now, how does the interest rate reduction refinance work later? So we've had a lot of people recently watch the channel, they do their research, then they reach out and they just want to clarify their financial position, and then look at, hey, if I buy right now, I know 7 months from now I could refinance. Well, what does the cost look like? Well, compare that to doing let's say doing a buy down, because you may be in an area like, let's say, Florida, where they charge transfer taxes on refinances and high title fees. So that might make more sense to do a buy down today, because you're going to be saving more money than if you were to do an interest rate reduction refinance loan a little bit later. This is why it's important to understand the power of the benefit, but also have clarity on the program, the fees that come with it, and why you shouldn't be paying extra fees at the same time, right? And if you're working with a company, again, that constantly markets to you, just be aware these marketing costs are built into your loan that you're taking out. We're here to help you use the VA home loan efficiently without all the extra costs the lenders pass down through marketing and hidden fees. Our focus is on education. We can help you navigate the VA loan home process and just make it as cost effective as possible. You guys can schedule a call with me down in the description. You do actually talk to me, and we do have a lot of flexibility on time to be able to talk with you. So hopefully you guys got some good information out of the video. Make sure you guys hit the like and subscribe button, and I'll catch you soon.